Here's what I love about TripleNet investment. Looking for a headache-free investment? Want to have a tenant like Chick-fil-A, Starbucks, Walgreens, Dollar General? In this video, I'm gonna break down everything you need to know about TripleNet investment. So TripleNet, those three N's, stand for basically the fact that you as a landlord are not responsible for paying the property taxes, building maintenance, or the insurance. This means that tenant takes on the big part of the expenses that you as a landlord have related to a property. So in terms of benefits with TripleNet, those are more steady investments. Some people call them as bonds of the commercial real estate market because you have tenants that have good credit score. We're talking about tenants that are those, triple B companies like Walgreens, like Starbucks. The other thing is that with those larger tenants, you can also have a corporate guarantee on your lease, which means if the franchisee tries to close the business, the corporate will still have to pay you for the lease agreement that you have with them. Next thing is that those leases are longer term leases. Those are 10-year plus leases that you're signing with. Other thing that I really like about TripleNet is that you can invest nationwide for the financing. Loan to value ratio, you're gonna have I would say it will range from 25 to 40% down payment depending on your creditworthiness, and other aspects of who's your tenant is going to matter when it comes to those loans as well. And I really recommend working with a mortgage broker when it comes to TripleNets because you can buy them nationwide. You don't need to buy them next door. So your local lender might not have that much expertise, but your local mortgage broker that works around the United States will have more to say and give you more advice when it comes to lending. As an investor, what you want to do is make sure that the tenant pays you and that they are following the lease agreement and what their responsibilities are. You want to make sure that they do the maintenance, etc., right, as agreed upon, and collect your check every month. In terms of downsides, it's a capped investment, right? Because there is a certain amount that they're gonna pay you every year. So if you're looking for a value add opportunity, I would say, and you're a more active investor that wants to do a value add, then those single tenant triple nets might not interest you that much. That being said, you can also wait for the single tenant to move, then do some renovations and be able to generate that value add. The other thing is that you have a turnover risk. Why? Because those buildings, right, those properties are built to fit that particular tenant, which means that if they leave, you will have to spend some money and restructure it. Again, working with a real estate professional will help you to know what type of triple nets you want to invest in to minimize that risk. The other thing is that there is also the risk with the location. Same thing. Upside, there is a whole logistic department working to find the right locations for those tenants. Downside, that might be a good location only for them. So if they move out, you might be stuck with a box, basically. With all the other commercial real estate deals, you can work with a commercial real estate professional, which I would recommend to work with someone that really understands the TripleNet deals and has done them before, because you're looking nationwide and they will be able to talk with you, understand what type of TripleNet you want to be invested in, and bring you the right deals to look over. The other way is, of course, you can go and find them online when you search for them. They're available on LoopNet, as well as there are some certain websites that are specifically for TripleNets. So when it comes to returns, and I mentioned this in previous videos, now I do believe it's a good time to invest in commercial real estate. Let's say a couple of years ago, if you were buying a triple net that has a good credited tenant in there, your cap rate, you would look at 5%. These days, you can find 7-8% cap rate, which is a good return on your investment, right? And again, I do think that appreciation-wise, if you have working with someone that does does understand those deals, right? As I mentioned, they do choose specific locations. They do choose locations that they know will be appealing. So you have not just a good cap rate these days, but also appreciation-wise of your property, it's gonna increase as well over the course of the time, right? And it's a stable and predictable investment. So you will have your tax benefits as always. I would say it like this: each asset class of commercial real estate is unique and beautiful on its own. That's what I think. So let's say comparing a multifamily versus TripleNet, right? I personally would rather invest in TripleNet than multifamily. Why? I don't need to deal with tenants. My return will be somewhat similar in terms of the cap rate and in terms of like what's my down payment is. My ROI will be similar these days. The downsides are that initial years they might be similar, but as I hold on to the property, I can do like a lot of value add opportunities here on my multifamily side that I won't be able to do on my TripleNet side. That being said, on my TripleNet side, I don't need to worry about dealing with the tenants, which is a big headache for multifamily owners. So I would say it's like, it depends on what you're looking, right? And that's why when we work with clients, we really sit down with them to understand what they want to do and why they want to invest in commercial real estate. So if you're looking for a passive investment with stable income and you want to sleep well at night and not worry about your properties, then go by TripleNet. If you want to have stable income but also not know what's going to happen tomorrow when one of your tenants decide not to pay their lease, go by multifamily. No, I'm kidding. Of course, there are a lot of advantages in buying multifamily, but what I'm saying, it's just a passive investment versus active. TripleNet, it's a passive commercial real estate investment. My name is Sova Messina. I'm a commercial real estate investment advisor with Oxbridge International. We do commercial real estate deals all over the United States, working on both sides, representing investors, also helping our current investors to diversify their portfolios. If you find any value and you want to learn more about commercial real estate, make sure to subscribe. If you want to chat and learn more about TripleNet investments or commercial real estate investments in general, click the link below. I'll be happy to connect. Thanks for watching, and I'll see you on the next video.